Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Today, we will be dissecting the results of HDFC AMC, the third largest mutual fund house in the country. It has assets under management of nearly 6,14,000 crore rupees. Now, the quarter three results of HDFC AMC have been impressive. Many brokerage houses have maintained a buy recommendation on this stock. So, in this video, we will thoroughly analyze the stock on fundamental and technical factors and check whether the stock is investable at current levels. So, if you are interested in quality, good performing, large cap stocks, this video is for you. So, let's start. First, let us look at the bigger picture, the mutual fund industry as a whole. How has it fared for December 2024? Now, a week back, AMFI, the Association of Mutual Funds of India, released the data for December 2024. Now, it says that in the month of December 2024, SIP contributions hit a record high of 26,459 crore rupees. Now compare this with the November figures of 25,320. So SIPs have been increasing for some time now, right? The retail AUM of the mutual fund schemes, all schemes taken together, equity, debt, hybrid, sector oriented, everything together, the total AUM, retail AUM of the mutual fund industry stood at 39 lakhs 91,313 crores for December in comparison to 39 lakhs 70,000 for November. So the total AUM has also increased. Now, what these figures show is that the growing popularity of systematic investing in amongst Indian investors. For the month of December, inflows in the equity funds surged by 14.5%. They reached 41,156 crore rupees. Now, this 14.5% was a month on month hike, quite impressive. Same hike was seen in thematic and sectoral funds as well as mid cap and small cap funds. What saw a slight dip was inflows in the large cap funds. Now, what do these figures show? Well, they show that investors are interested in earning higher returns by investing in specialized and small cap sectors. Let me tell you an interesting fact. The asset management industry in India has grown at an impressive CAGR of nearly 20% for the past decade. Now, this performance has outperformed major players in the financial sector. So, talking about growth potential, the AMC industry has tremendous growth potential in the country. Let us now focus our attention on the financial performance of HDFC AMC. Now, the company released its quarter three results today, and the results have been very impressive. The net profit has jumped 30.8% year on year basis to reach 641.8 crores. Operating revenue soared 39% to reach 934 crore rupees. AUM has grown 35% annually to reach 7.8 trillion rupees. The market share of HDFC AMC has also slightly improved from 11.5 to 11.6%. EBITDA margins have expanded at an impressive 81.7%. So all in all, yes, the report card is really good. See, the space that HDFC AMC operates in is highly competitive. There are many new entrants and players who are vying for like a share in the new investments. Companies like Motilal Oswal, Edelweiss, Quant are also gaining traction in the increasing popularity of mutual funds, like right. So in face of this tough competition, HDFC was able to maintain its market share, is quite impressive. I will read out a few lines from the management commentary which struck a chord and came across as a factor which can help HDFC gain competitive advantage in the market. Now, the lines go, HDFC AMC's management is focused on improving market share and becoming the leader in its existing product offerings. Fair enough, right? They are guiding for expense growth in the 12 to 15% range, indicating a strong focus on operational efficiency. Now, what this means is they are targeting lowering of cost, thereby increasing their efficiency and profits. Now, this strategic approach could be key in maintaining competitive advantage in a crowded market. These three lines, uh, like what I came across as a distinguishing factor, which could be good news for HDFC AMC. HDFC AMC stock today rose by 5% and closed the day at 4,037 rupees. Now, on the technical front, the stock has shown resilience. It is currently trading above its 50 and 200-day moving averages, which indicates a bullish trend. The relative strength index RSI is in neutral territory, while MACD shows recent bullish crossover. However, the stock may face resistance at 4,200 levels, which will be crucial to watch in the coming weeks. What are the brokerage houses saying? Well, brokerages have been largely positive on this stock. Barring City, I think Jeffries is maintaining a buy rating with a target price of 5,000. Nuvama also has set a target of 5,200, citing improved yields. Motilal Oswal has also a buy recommendation with a target of 5,200. HSBC takes a more cautious stance with a hold rating and a target of 4,350, pointing a stagnant market share in the equity AUM of the company. An interesting tidbit again. HDFC AMC processes more than 11 million SIP transactions monthly. Now, the total valuation of these transactions crosses over 38 billion rupees. Now, can you imagine the sheer scale of operations? Yeah, this is only with HDFC. Can you extrapolate it to the whole industry, and then the scale of operations at which these transactions are happening is just humongous. Let us summarize the challenges and opportunities for the company. Looking at the challenges, well, HDFC, as I've already told you, is in a space which faces intense competition from new entrants as well as fintech startups. Again, regulatory changes may affect the profitability of the company, and market volatility, as we have been seeing the markets going up and down for quite a few days now, can affect investor sentiments. Looking at the opportunities, well, there is a huge untapped potential in India with tier 2, tier 3 cities, rural areas where the reach is limited, where people do not know about mutual funds, and they still prefer traditional investment tools like bank FDs and post office savings, right? So there is a huge untapped market in this area. There is a growing interest amongst investors for passive and ETF funds, which is an opportunity for AMCs, right? And rising demand for goal based and personalized investment products is also an area which shows great potential for AMC companies. Well, to wrap up this video, the performance of HDFC AMC in quarter 3 has been really impressive thanks to the ever increasing popularity of mutual funds and SIPs, right? But again, the markets currently are very jittery. There are a few geopolitical changes that are going to happen with Trump coming into power. What happens to oil prices, what tariffs he lays, are all going to affect the market and so the share prices. So, in this current scenario, it is always advisable that you align your financial goals with your investment options. Before we end this video, I want to tell you about the historical returns for the last 30 years for Nifty 50 and Nifty 500. Now, study shows that over 30 years, Nifty 50 has given a return of 11%, whereas Nifty 500 has given a return of 10%. Now, Nifty 50 is a basket of large cap stocks. Nifty 500 include mid cap and small cap stocks as well. What these historical returns show is over a longer period of time, large cap returns have outperformed mid cap and small cap returns. So if you are a value investor and looking to increase your wealth over a long period of time, quality investing in large cap companies, good performing large cap companies, is going to help you achieve your financial goals, right? So before I'm sorry, you make your investment decisions, always like decide on your financial goals and when you want to reach them, the timeline to reach those goals. Seeking advice from experts is a sure shot way to go in the right direction of achieving your goals. So finally, do your own research. Be fully aware of what you are getting into when you are investing in stocks, right? They are risky. If you have liked my video, please like, share, and subscribe to my channel for more such informative content. The idea of making these videos is to spread financial awareness and help people, investors like you and me, make right investing decisions. Until next time, stay safe. Goodbye.